America. We have a really good webinar lined up for you tonight, but first I just want to tell you a little bit about Green America. We operate on the belief that individual actions, when multiplied, can drive significant societal change. And our theory of change is rooted in empowering individuals and businesses to make conscious choices that prioritize people and planet. We have innovative campaigns, advocacy efforts, educational programs such as this one, and we strive to inspire and equip people with the knowledge and tools needed to affect positive change in their communities and beyond. So we have a number of different campaigns such as labor, food, climate, finance. We promote renewable energy, help people align their money with their values. We're committed to addressing the most pressing social and environmental challenges of our time. So throughout this webinar, we're going to explore responsible insurance. And this webinar will be slightly different from some of our previous responsible finance webinars. Some of the others we've long had, say, a banking campaign, and most of our audience, most of our members and supporters are really acquainted with what is the problem with the big banks. But the insurance campaign is new to Green America and really new to the climate finance movement as a whole. So we'll be doing a little bit more about the problem on this one. Okay, next slide. Great. So now I'd like to introduce the facilitator for this webinar, Reverend Amy Brooks Paradise. And Amy is the North America organizer for the global environmental nonprofit Green Faith. Amy is a Unitarian Universalist minister working on climate finance and Green Faith circle development. And I've had the honor of working with Amy and Michael, who's also here, on a curriculum for aligning your money with your values in banking, credit cards, insurance, and investments. And so much of what you'll hear throughout this entire series comes from that webinar. So welcome, Amy.
Thank you so much, Cathy. It's great to be here with everybody, and welcome to all of our participants. We are glad you're here. So I want to bring on my co-facilitator here, Mary Sweetsers. Mary Sweetsers is a senior strategist with the Sunrise Project, where she works on the Insure Our Future campaign. Mary works with insurance professionals, NGO partners, and private and public sector leaders to urge the insurance industry, to take meaningful action on climate change by ending fossil fuel underwriting and investments and accelerating support for solutions to climate change. Welcome, Mary.
Hi, thank you. Thanks for having me. I'm excited to be here.
Well, I'm really glad you're here because insurance is a whole new world, as Cathy was saying, and even all those words I just read, sometimes I'm not sure I understand what they mean. So I'm really glad you're here to help break it down for us. And let's get started. I was reading in your description, you've been working with the insurance industry to take meaningful action on climate change. And one of the things I've heard about, and I bet others have too, is how insurance companies are dropping clients or refusing to cover certain states or certain kinds of investments. And I don't really think that's the kind of meaningful action you're referencing. So please tell us about what you're doing in your work.
Sure. So yeah, I guess maybe I'll back up a little bit, and I know this will get covered a little bit later on, but wanted to sort of set the stage. So yeah, I think what a lot of folks are hearing in the news is about how insurance companies are withdrawing coverage from certain regions that have been hit particularly hard by climate impacts. I live in Northern California, and I'm surrounded by neighbors who have all received either non-renewals or in some cases cancellations, or who are afraid that that's probably coming down the road for them. And I think one of the things that that part of the story is not really telling is kind of the whole picture of how insurance companies, their relationship to climate change, they're currently kind of reacting to, big events that are happening and are exacerbated by climate change. But what I wanted to take a step back and kind of talk about a little bit, and what the campaign that I work on, Insure Our Future, is about, is looking at the fact that insurance companies are actually supporting the fossil fuel industry, which is driving climate change, mainly in two ways. One is through their underwriting. So just like they provide policies to cover homes or autos or all these other things that we're familiar with, they're also providing insurance coverage to build and operate fossil fuel infrastructure, whether it's an oil pipeline or fracking or coal mines. All those kinds of things need insurance coverage to be built and to operate. So that's one way. And the other way is through their investments. Insurance companies are major investors of many things, but including the fossil fuel industry. And in fact, generally, if they were as a whole institution, they're the second largest institutional investor after pension funds. And so this relationship to the fossil fuel industry is kind of this kind of interesting hypocrisy, which I know some folks will get into later, where they're reacting to climate impacts and withdrawing coverage, which is affecting a lot of folks like us, but they're continuing to exacerbate the problem by financially enabling fossil fuel industry to keep doing what it's doing. So the Insure a Future campaign has been operating for about 7 years now. We're a worldwide network of a bunch of different, mainly nonprofit organizations who are taking a bunch of different strategies to try to get the insurance industry to, basically exit from the fossil fuel industry and to stop fossil fuel expansion by means of insurance as a leverage point. So I'll stop there because I know we'll get into more details later.
Well, thank you for giving us that overview. And you mentioned something that's near and dear to my heart, some of the what you called hypocrisy. It seems just bizarre to me that an industry that's trying to reassure people that their risks and their properties are covered is at the same time increasing that risk by insuring the industry causing the problem. And for me, as a person of faith, I'm really interested in inspiring people to live out their values when it comes to how we live on the planet and how we can use our resources for good. And, I even think that there have got to be plenty of people in these industries, including the insurance industry, who would describe themselves as people of faith. And yet somehow it seems we don't realize what's happening, or we ignore the inconsistencies because we don't know what else to do. And I'm wondering in your work, if you have thoughts on sort of those leverage points of appealing to people's, good side or conscience or morality or faith that can help us in this fight to really persuade these insurance leaders and giants to behave differently, to take better care of all of our future.
Yeah. Yeah, I mean, I share the belief that individuals in these companies are good people. I've gotten to know several of them, and they are guided by, a set of morals or perhaps a faith. And I think, unfortunately, they're operating in a system that's focused on short-term thinking. It's putting profits above all else. And individuals are rewarded, such as CEOs are rewarded for making decisions that support that sort of shorter-term, profit-driven thinking. It's just kind of how the system's set up. And it's not an excuse. I and many others spend our time demanding that these individual leaders of these companies make choices that don't harm the rest of us. But it's a reality. And I think, I have talked with a number of insurance professionals who are very concerned about this and who are trying to raise some of these conversations within their companies and within their workplace because they are very concerned about the impact that their companies and the broader industry is having because they're looking around and they're seeing the same problems that we all are.
Well, that's good to hear. It gives me a little bit of hope for sure. I wonder too, the financial system is one that I think a lot of us are learning about in ways that we never imagined that we would have to before. And I always think about, the hidden costs, when they're analyzing the cost of something, they're using a very prescribed set of data, I think, in terms of what they use to make that decision. And I wonder if there's any movement within the system to think about the greater costs to human health and so forth. Is that part of the conversation?
Yeah, certainly. Excuse me. I think, certainly there are people who are working every day to look at how can we make sure to knowing that climate impacts are going to be continuing to affect communities across the country and across the world. What can we do to mitigate some of those impacts and make things a little bit better, a little bit easier for folks? And then also, yeah, looking at there are people within the insurance industry who have been sort of flagging that, hey, we might be using kind of models that are not giving us just the right
Whoops.
information. There's actually some great reports that have come out. Oh, go ahead.
No, sorry. I think one of us froze, so I was just checking.
Amy,
But
were you going to say
on.
something?
Oh, I might have frozen.
Oh, okay. It might be me, but so let me know.
That's
Um,
okay.
but yeah, I think, there's certainly folks across the insurance industry who are trying to, flag some of these issues and say, hey, maybe some of the models that some of the assumptions that we're making aren't correct. Maybe some of the kind of worst case scenarios that we've sort of built in right now aren't actually the ones that maybe we should be looking more deeply. And I think there's some interesting reports and things that have come out, and I can pull some of those up and share them in the chat as we go. But yeah, certainly there are. And then there's also, I think, I'm assuming for a lot of the folks who are here on this call, the uninsurability issue, or whether it's non-renewals or increasing rates, has been something that may have come to your community. So I did want to just flag maybe here in the chat real quick. There's a group called United Policyholders who has some really good resources, and they do a lot of great work to advocate on behalf of consumers of policyholders. So I'll put that's the website there. United Policyholders is the group. And yeah, they've done they're based here in California, but they do work, I think, beyond California, and they've have some very good resources. So I would encourage folks to check them out.
Thank you so much, Mary. We're about to wrap up. Is there any last word that you want to give to our listeners before we jump into some nuts and bolts about how to find better insurance?
Yeah, just to say, I'm really glad that folks have joined this webinar to learn more about this, and wanted to thank Green America and all the folks who have put together this directory, which you'll learn about a little bit more. I think that there's a lot of ways for folks to, even if it feels like it's kind of a what could I do sort of situation, that there are steps that people can take. And so we'll be talking about those in the webinar. But yeah, just very excited that people are here talking about this issue.
Well, Mary, we're so glad you're here, and we appreciate all the work that you're doing. What might seem like behind the scenes to some of us. So it's good to like bring it forward to know that there are folks like you out there advocating all the time for us and for a better insurance future for everyone. We are going to turn now to the presenters. And as we do so, I want to continue to encourage people to put things into the chat. I've seen a few questions, and we'll answer them as we go along, or we'll save them for the end. But now I want to introduce Cathy Becker and Michael Richardson. And I'm going to begin with Cathy. Cathy, as you know, is the Responsible Finance Campaign Director at Green America, where she helps people align their money with their values in banking, credit cards, insurance, and investing. Major projects include a nationwide directory of community development banks and credit unions, a first of its kind directory of responsible insurance companies, which we're just rolling out, and an Investing 101 mini site. Previously, she led Ready for 100 Ohio, which worked with Columbus and several suburbs to enact electric aggregation for 100% renewable energy, and directed the local sustainability nonprofit Simply Living. Welcome again to you, Cathy. And then we also have Michael Richardson, who is the co-facilitator of Third Act Upstate New York and is on the steering committee of New York Renews, the force behind the landmark NYS Climate Act. He is also a convener of Rivers and Mountains Green Faith, a multi-faith group of climate activists in the Upper Hudson Valley of New York State. From a varied cachet of experiences, including organic farmer, solar and heating contractor, labor economist, county legislator, and Buddhist practitioner, Michael is committed to bringing attention to the moral imperative to stop funding climate chaos. Welcome to you, Michael. And I invite you two to take it away.
Wonderful. Well, next slide, please. Okay, great. So here is our agenda for tonight's presentation. As I mentioned, because this is a new topic, we're going to be spending a little bit more time talking about, kind of the problem with mainly the big insurance companies at this webinar and how they are, supporting the fossil fuel industry that is actually exacerbating climate change. We'll give you some specifics about how big insurance companies are insuring risky and expensive fossil fuel projects and how that insurance is required to do these projects, and also how many of them are disproportionately investing our premiums in fossil fuel companies. But we're also going to get to some of the solutions of how you can find more responsible insurance and what that looks like, including a sneak peek at our brand new responsible insurance directory. Okay, next slide, please. All right, so really just on a very macro level, what is the problem with the insurance crisis? It's the same problem with the entire climate crisis. It's a moral, spiritual, and ethical issue. Our society is placing money and short-term profit above all other considerations, such as our health, the health of our planet, the existence of wildlife and other species, and even our democracy and our children's future. That's what the climate crisis threatens. And big companies, including big insurance companies, are leveraging all of that for the sake of short-term profit at the cost of a livable planet. Okay, next slide. So property insurance, and that's mainly what we're talking about. We're not really talking about health or life insurance. We're talking about home and auto, property and casualty insurance. And that is directly on the front lines of the climate crisis due to the climate chaos that's already here. So this is a graphic from NOAA, the National Oceanic and Atmospheric Administration, showing the number of billion-dollar weather and climate disasters in 2023. And we had 28 of those last year, which was a record. And it's been going up every year. It's not necessarily a record every single year, but the trend is definitely way up. So their maps, if you go to this website, it goes back to 1980. And these billion-dollar disasters, they can be heat waves, flooding, hurricanes, tornadoes, wildfires, winter storms, just any sort of weather disaster. Since 1980, we've seen 378 such disasters for a total cost of $2.7 trillion and over 16,000 lives lost. And as the climate crisis continues to worsen, these climate disasters will just keep piling up until our society really gets serious about, addressing the climate crisis. Next slide. All right, so insurance companies are supposed to protect us from these climate charged storms. So if a disaster strikes, we expect our insurance to foot the bill for repairs and rebuilding. But instead, the largest insurance companies are increasingly, as Mary mentioned, dropping customers and raising rates, all while insuring and investing in fossil fuels. They talked about Insure Our Future, and Insure Our Future has a scorecard that I encourage you all to go look up on their website. They're tracking dozens of large insurance companies worldwide and pressuring these companies to do better. And it started with pressuring companies to stop insuring coal, and that has had some success. You can see that so far 7 major North American insurers are restricting insurance for coal, but almost all of them still have no restrictions on oil and gas, where many of these emissions are coming from, especially the methane emissions. And also these companies are continuing to invest in fossil fuel companies. They take our premiums, and some of our premiums get spent on, rebuilding and repairing when disaster strikes, but a lot of them are invested. And as of 2019, which is the last year we have solid data for, they had invested $582 billion in fossil fuels. Okay, next slide. So how does this work? This is another graphic from Insure Our Future that sort of shows the chain of events. And what ends up happening is just, like most companies, most large corporations, what they're doing is internalizing profits, but externalizing costs. So, this starts out, you have an insurer and you pay your premiums to your insurer. And say an oil and gas company also has to have insurance, and they also pay premiums. And it may well be, if you've got, one of these big insurers, for example, Liberty Mutual, you're paying premiums to them. oil and gas is paying premiums to them. And that insurer is also investing those premiums and insuring some of those fossil fuel projects. Those fossil fuel projects increase risks from climate disasters. Those disasters may strike your home or other people's home, and that can affect your rates if insurance companies are paying out for a lot of other people. And so then that ends up with higher premiums for insurance. And then that goes, so it just becomes like a vicious cycle. And so that's how this happens. This yeah. So this kind of, but what ends up, the result of this is that we're the ones, the policyholders are the ones paying the cost, because as the premiums go up, it's almost like a de facto carbon tax on us. Not, nothing intentional. It wasn't legislated that way, but that's kind of how it ends up being, because we're the ones paying the higher premiums, or in some cases having our policies canceled or having insurance companies exit our states altogether. Okay, next slide, please. So here are just some of the cases where insurance companies have made headlines for dropping policies and exiting states. And you'll get these slides after this event. All of these green words with underline are links. And so you'll get a PDF of these slides, and these links will be active so that you can go look up this information for yourself. But, many people know that State Farm and Allstate stopped accepting new policies for homeowners in California last year. Farmers stopped offering home and auto policies in Florida. Nationwide dropped policyholders in coastal North Carolina. And just currently in Louisiana, they have a law that has been on the books for some time, that if you've been with your insurance company for 3 years, they can't drop you. Well, Louisiana is repealing that law. And so we're expecting more people to be dropped there as well. That's a very climate vulnerable state. And there are lots and lots of other examples. These are just some of the ones that we pulled from the headlines. Okay, next slide. So, but even if you're not one of the unlucky people whose policy is being dropped, it's very likely your rates are going up, because as insurance companies are paying more for climate disasters, they are raising rates. And this table is from the Policy Genius Home Insurance Pricing Report. This shows the top 10 states for rising rates from 2022 to 2023. You can go to that link and find your state. It lists all the states. I just pulled the top 10 here. Premiums are up an average of 21% nationwide just between those 2 years, and have gone up again since then. But it's higher, way more than 21% in some states. The middle column there is the average renewal rates by state for home insurance. And so again, you can go look up this and see what's going on in your state, but really everywhere the cost of insuring your property is rising much faster than incomes people are making. Okay, next slide. So what is this effect on our overall economy? So without insurance, people can't get mortgages. You can't drive a car if you can't get car insurance. You can't get a mortgage if you can't get home insurance. But as rates continue to rise, more people are going without insurance. And in industry parlance, that's called going bare. And so this report from the Consumer Federation of America found that there are 1.6 trillion in property values around the country that are uninsured, because people they own a home, but they don't have insurance. So the average rate across the country is 7.4% have no insurance, 6.1 million people, that's 1 in 13 homeowners. But this, like everything else about the climate crisis, this hits some people harder than others. The effects are not equal. So this hits hardest low income and people of color, just like everything else about the climate crisis. So homeowners making under $50,000 per year are twice as likely to be uninsured. Rural areas are at 12% uninsured. Homeowners of color are very much at risk, with 22% of Native American homeowners uninsured, 14% of Hispanic, and 11% of Black homeowners uninsured. This map shows the cities where you're most likely to be uninsured. Miami and Houston are at the top, two very vulnerable climate cities. And not if, but when another storm strikes these cities and destroys these people's homes, they won't be able to build back because they don't have insurance. And this is going to become this is threatening to become a big drag on the entire economy. And this is something that policymakers are really going to have to take a hard look at. Okay, now I'm going to turn it over to Michael to tell you more specifically about how insurance companies insure and invest in fossil fuels.
Well, Cathy, I'm going to take it right from the top by insure and then invest. So let's take a look at the first slide here. Next slide, please. Still waiting on the next slide. There we are. The role of insurance. As you mentioned, Cathy, without insurance, the fossil fuel companies cannot get financing. And so let's take a look at what happens in our own lives. If we want to buy a house and we're going to finance that house, it's going to be a requirement that we have insurance. Even if you buy a car and you're going to finance that, you're going to have insurance. But even if you pay cash for something, you're still going to want to have insurance simply because it's a major asset. But how it works with the fossil fuel companies, if they want to have a new capital project, so here you're looking at an operation, a frac pad. Let's say that's a refinery, or maybe it's a pipeline. Most of the fossil fuel companies do not use their own working capital for these types of projects. They go to the money market in order to get financing. And this works out well for them as far as their business models for tax write-offs and other advantages. So the way it works is they're going to go to the money market, and they're either going to go to the banks to get loans or other underwriting instruments, or they're going to go to investors and seek out public and private equity sources, or they're going to end up going to governments to get subsidies. None of these entities, the banks, the investors, or the governments, are going to give them any money whatsoever without some sort of insurance against the loss, the risk. Let's take a look at the next slide. So here are where we're looking at some risky projects. I at once thought that insurance companies were adverse to risk, that they didn't like risk. But actually, I've learned that they love risk, because the higher the risk, the higher the premiums. The higher the premiums, if the actuaries are doing it right, the higher the profits. So think of some of the things that go wrong. When they go wrong in a really big way. BP oil platform, we know about that. The old Exxon Valdez catastrophe. Or most recently, the pipeline that ruptured in Kansas. When it goes wrong in a really big way. So there are high premiums for these risky projects that yield very good profits. So let's look at the next slide. We mentioned the Trans Mountain Pipeline. Can you imagine something going wrong here? Here's a pipeline that goes from Edmonton, Alberta, all the way to the Pacific Ocean in Vancouver. Some of the most pristine high mountain regions in North America. And these are tar sands that are very, very thick. They're mixed with a slurry of chemicals in order to make it fluid enough to move through the pipelines. If that pipeline ruptures, and it very likely will someday, you can imagine what the catastrophe is going to be and the cost of the cleanup. The top insurers that you see here, some of them you recognize, Liberty Mutual in particular, because that's that cute little Inu who's out there on the commercials playing volleyball. Let's take a look at another example. Next slide, please. The LNG terminals, liquid natural gas. These are the terminals that exist, you've listed here in Texas, Mississippi, on the Gulf. And look who the insurers are. You'll recognize a lot of them, Liberty Mutual. You'll recognize the Hartford, Berkshire Hathaway, that's Geico. Here again, when these projects are put in place in these areas where there are large populations at seaports, if there is a leak of liquid natural gas, there is a potential explosion that is equivalent to a wartime bomb going off. And we have had some problems like this, some accidents that have happened already in the Gulf Coast. So let's take a look at the next slide. We talked about insurance companies doing what they do. They insure. But what's this about investing in climate chaos? How does this come to be? Some of you might have been part of our workshops back on banking, where we showed you how the major Wall Street banks, the mega banks, are out there making loans and other investments in the fossil fuel industry. They're doing it in a disproportionate way. We'd expect investors to be out there investing in the breadth of the market. It wasn't but 20 years ago that fossil fuels made up 20% of the market. Today, they make up slightly over 4% of the market. But if you stop and look at what's going on with the mega banks, they're investing more than that 4%. And when you look at these insurance companies, they too are investing more than 4%, disproportionately into fossil fuels overall. And here's some examples of insurance companies that we use for our home and auto insurance. So how does this work? Again, let's go back and look at the banks. We make deposits into banks. That money just doesn't sit there waiting for us to withdraw the money from our bank accounts. The banks go out there and they make loans and they underwrite other investments using our deposits. And we showed you how you can leave the mega banks and move your money into community banks and credit unions to see that money, instead of going off to these fossil fuel projects, to go back into your community in investments and loans that align more with your values. Well, here it's much the same way, Cathy. Our premiums are not sitting there. I used to think that I would pay my premium, you would pay your premium, Mary would pay her premium, Amy would have an accident, and we would pay her claim. Now, it does work that way, but that money is just not sitting there waiting to pay the claim. There are millions, billions of premiums that are sitting there being used by the insurance companies to invest in the market. And as I've pointed out, disproportionately, they're investing in fossil fuels. This is a perfect chart to show you where that's going. So next slide, please. There's this intersection. We talked about the insuring and the investing. And this is just where there is complete hypocrisy. Let's look at Liberty Mutual, which is also the parent of Safeco Insurance. You can see here the amount of money that is invested in fossil fuels and the type of projects. Mountain Valley Pipeline, which we looked at the map, the LNG terminals, and others. But what's amazing here is that this is a mutual. It's not a publicly traded or privately traded invested insurance company. It is a mutual. A mutual, by definition, is a company that's owned by the policyholders. In a moment, we're going to ask you to take a close look at some regional mutuals as an example of where to get insurance that is not part of the money pipeline to fossil fuel ventures. They function the same way that a credit union would function or a cooperative. The members are the company. Liberty Mutual, if it's one of the largest insurers of fossil fuel projects, then who actually owns the company, the insurance company? Well, disproportionately, it'll be the fossil fuel companies themselves. So the insurance company, Liberty Mutual, is made up of a lot of fossil fuel companies. They then turn around and own the insurance company. It's kind of like insuring yourself. But you can imagine going to an annual meeting of Liberty Mutual and putting a resolution that they should be moving away from fossil fuels, not investing in these type of projects. I don't think you would have very much success with this particular meeting of trying to get that resolution through, because the people that are going to be voting on it are going to be the fossil fuel companies themselves. Let's take a look at what goes on in a publicly traded company, and we're going to pick on Geico, Berkshire Hathaway. That's Warren Buffett there, the Oracle of Omaha. Same thing, one of the largest investors and insurers in fossil fuel projects. Now, here's where this intersection of insurance and investments, with the investors that own the company that owns the insurance company is insuring, but then also turning around and investing in the companies that they are insuring. That some of these companies have turned around and sued municipalities for not putting in proper mitigation to stem from the climate disasters. Classic example is back in 2014, where Farmers Insurance sued the city of Chicago for not properly protecting against damage that was being caused by storms. So here's the hypocrisy. The insurance company that is investing in the fossil fuel business that creates the greenhouse gases, that causes the climate disruption, that causes the destruction in the city where the claims are being made against the insurance company, turns around and sues the city. It's just madness. Next slide, please. So what can policyholders do, Cathy? What is up to us to get away from this money pipeline to climate chaos?
Yeah, so next slide will show you one quick and easy thing you can do to begin with. Green America has an action alert that we launched during the Insure Our Future Week of Action a couple of months ago. If you take this action alert at greenam.org/insure our future, you'll send a message to 70 plus execs at 8 major insurance companies, pretty much the ones you've seen throughout this presentation, telling them to stop profiting off fossil fuels while leaving customers holding the bag. So we encourage you to take this action and let these insurance companies hear that you're not happy with them about this. But there's still more you can do than also to look for better insurance for yourself. So next slide, and send that one back to Michael.
Well, as we said with the banks, that if you want to move away from the mega banks so that your money's going from doing harm to, let's say, no harm, it's pretty simple. You just go anywhere else. Leave the mega banks, Chase, Citi, Wells Fargo, go anywhere else. And you've gone from doing harm to doing no harm. But we also showed you how you could go to seeing your money doing good by going to the community bank or the credit union where the loans and the investments are happening within your community. Let's simply say, eat local, shop local, bank local. That's your solution. So it's much the same way here. Leave the major insurance companies, these big commercial insurance companies that are disproportionately investing in fossil fuel projects and also out there insuring the fossil fuel projects. So what we recommend you do is that you go to your independent insurance agent and ask them to quote a regional, mutual, or cooperative insurance company. So if you're like me, I had Travelers Insurance, and I went down to my independent insurance agent that wrote Travelers, and I asked them to quote me these regional, mutuals, and cooperatives in my community. And they gave me 3 different quotes from 3 of these different ones. And Cathy, I ended up saving on exactly the same coverage, what we call apples to apples, $700 a year. And I think your story, you saved something like $1,200 or something like that, did you?
I know.
So now different agents, as it says here, work with different companies. So you need to really shop around. I would recommend you don't just go to one insurance agent, because if they're not selling enough of a particular company, that company won't do business with them. So it's not like going to the supermarket where you have unlimited brands to choose from. You might have to go to 3 different bodegas to see what they have on their shelf, so to speak. Now, there are a few of these mutuals, we're going to mention Amica maybe a little bit later, that you can get online, kind of like Geico, just 15 minutes or less. So there are a few of these mutuals that you can contact online, but many of them will be on access through an insurance agent. So Cathy, we unlike with the banks where we had mighty deposits or Bank for Green or that map that you guys have on Green America. To date, we haven't had a directory of names where you could go in and say, hey, dear Mr. Insurance Agent, give me a quote for A, B, and C. What are we doing about that?
Yeah, so next slide, please. So we're really thrilled to roll out the first of its kind responsible insurance directory. So Michael mentioned this to me, oh gosh, a few months ago, that there are several different, tools to help you find a community bank or credit union. There is no such thing for insurance. So we decided we're going to make one. And I'm going to share my screen and show it in a minute. This directory lists home and auto insurance companies that do not insure fossil fuel projects that we know of. Now, just a caveat, it's not always possible to get, for every project, the insurance certificate. So we don't know for every project who insures them, but ones that we do know of, they are not on this list. Or they invest 0 or small amounts in fossil fuels. And this is based on a database called Investing in Climate Chaos by the German NGO called Ergewald, and they pulled their information from the London Stock Exchange Group. So that table you saw earlier, that all came from the Investing in Climate Chaos database. That's what we're using to determine how much they are investing in fossil fuels. So just a caveat that this directory is not definitive. It's not like we had the time and resource to comb through every insurance company that there is, but it will give you suggestions. And you do need to still go shop around, but this will give you some ideas of insurance companies you can ask an independent insurance agent about. We have a cross section in a number of states. There's more in some states than others. And this is, it's not quite finished yet. So I do want to give a big shout out to our insurance directory researcher, Mike Moore. He's been working really hard the last few months, just combing through insurance finances. And so we're looking at insurance, investing, and also their ratings in AM Best. We don't want to put an insurance company out there that just is really on the skids and is probably going to go under. We want them to be reasonably stable. And a lot of these regional mutuals have been around for, literally 100 and more years in their communities. So they are very stable. And it's an evolving resource. So if you know of a good insurance company in your area, or you find one and we don't have in our database, we want you to let us know. So I am going to try to unshare this screen and let's see, and reshare just to give you, let's see, just to give you a look, just a peek into this new directory.
Yeah, and Cathy, people are asking when there's going to be a link available, so I don't know if you can address that.
Yes, it is available now, greenamerica.org/insurance directory. And you can also get to it if you go to the finance homepage. You go to the Green America homepage of the website, go to finance. There's a big promo in the upper corner, so you can get to it that way as well. So we have some text here just basically stating most of what you've heard in this webinar. And then we have a little bit of explanation about the directory. And so, one thing I want to point out here, we have this directory state by state. And like I mentioned, some states have a lot of companies, some states not so many. We're trying to fill out the states that don't have as many companies yet. And for each company, we're giving them assigning them a grade. So if we do not know of any fossil fuel investments, we can't say necessarily that definitively they do not invest in fossil fuels, but they are not in the Investing in Climate Chaos database as investing in fossil fuels. And so that they get a grade A if they're that. If they have up to 200 million in investments, we give them a grade B. And 200 million sounds like a lot to regular normal people. That's a lot to you and me. But 200 million is less than 0.5% of what Berkshire Hathaway has invested. It's a very small amount for these large institutional investors. And so there's some states that don't have very many. And so, we have to dip in a little bit, and we don't want the perfect to be the enemy of the good here. So we are including some of those. We do not have any grade C companies in there yet. We haven't had to dip that far in, but we have the ability to go up to 500 million, which would be about maybe 1% of what Berkshire Hathaway has invested. So it's still a small amount compared to the really big ones. And we don't have any grade C in the database yet, but we may be adding some if we have a state that we have very few in there. So we have this state by state directory. And if you just click on, say, California, we have, like I said, this is not necessarily comprehensive, but it gives you some ideas and things you can ask about. Michael mentioned Amica. That's one you can go and get a quote online from anytime. I think they have about 100 million invested, and a lot of people really like Amica. So, we wanted to list them because they're well known and well liked. But if you want to call them and say, hey, you might want to think about moving that 100 million you have invested in fossil fuels, well, that wouldn't hurt for you to engage with them. So, we have just 3 in Louisiana. That's a climate vulnerable state. Clearly, the insurance companies are favoring the Midwest. We have 14 in Ohio. So that, there's, I guess, a view that the coasts are maybe more vulnerable and the Midwest is less vulnerable, but you may have seen a New York Times story recently that says, no, that's actually not true. That Iowa is very vulnerable, but we do have quite a few in Iowa.
Kathy, we have a bunch
So
of questions. How are we doing on time?
Yeah, let's move on to Q&A.
And Kathy, just one thing on the directory we would need to make clear. We are not recommending any of those companies. What we are doing is we're suggesting that you might ask your independent insurance agent, or when you're out there shopping, to give you some quotes about them. So the idea is, where do I go to get away from the big guys? Here's a list.
Okay, and I hope that answers. There were a couple of questions about how can I find out if my insurance company is insuring any fossil fuel projects, or how can I find out if my insurance company is investing in fossil fuels? I think the quick answer probably is most of them are, but you can check this list, right, to see if we can find something that's better.
Yeah, the list, whether it's A or B, again, A would mean that we found no indication. We found no indication that they are investing in or insuring fossil fuel projects or ventures. B is they're got a little bit of investments going, but Kathy said, don't let perfect be the enemy of good. That's where we use the A, B, and C rating.
Great, thank you. So we had a couple of quick questions that maybe people can just answer in the chat. One is, what is the time frame for the 582 billion investment by insurers? I don't know if that one got answered or not, but if someone has that answer, please drop it in the chat. And also, please put the link to Big Insurance Action in the chat. Kathy, that was the slide you showed. It's how people can reach out. So if you could drop that link in the chat, that would be great. Now, on to specific questions. One is, should I join the state-sponsored insurance company in my state? And then it says, usually the insurers of last resort.
I think that's a good question for Mary. Excuse me.
Yeah. Yeah, thanks. So, just in case folks aren't as familiar, many states, not all, have what's called like an insurer of last resort or kind of a backstop insurance program. They're funded in different ways. For example, here in California, actually, insurance companies, they contribute the fund into the fund based on their kind of their market share within California, but they're funded in different structures in different places. And I would say, at least from what I've read from consumer advocates and my understanding is that they are truly a last resort. I hear and see people's kind of testimonies frequently that the coverage is often not as good and is more expensive. And sometimes you have to get supplemental insurance on top of it anyway. So that is, I think, it's most ideal if you can find an insurance company, potentially like one of the ones included in the directory, rather than going to the insurer of last resort. But of course, for some people, that is the only option for them.
Thank you. Here's another one. Someone said, Texas having lots of oil will be very slow to transition to renewable energy. Do you advocate an all or nothing response by insurance companies?
Well, I'll chime in here again real quick and then let others, speak as well. But I would say for Insure Our Future, at least our position is that, no one's asking for the switch to be flipped overnight. We are first kind of prioritizing, based on, the climate science, that no new fossil fuels can be built. Like a planet just cannot afford it. So we're really focusing our asks and our engagement with insurance companies on no longer underwriting new fossil fuel projects or expansion, and then phasing out over a timeline their underwriting support for fossil fuels, with their current clients.
Anybody else want to chime in on this one?
Well, I'd just add to what Mary said, that even when we're looking at the banks and the credit cards and the like, that the ask is no new projects. We need to rapidly transition. We all know this. In 2023, this country dug up, extracted more fossil fuels than ever before. In 2023, more greenhouse gases went into the atmosphere than ever before. And the big banks and the insurance companies financed more money than ever before. Now, this is not flattening the curve. So we've got to transition as rapidly as possible. So let's start with no new, and then we'll get rid of the old as we transition.
Thank you. So we've talked a little bit about this, but I want to lift it up again that, this is a systemic issue. I mean, we hear all the different ways in which the insurance companies and the fossil fuel companies and the banks are in each other's pockets, right? Like, I'll fund your thing if you insure my thing, and then we'll both go invest it over here, and then you can take that investment and give it back to me in dividends or something. I mean, it's just ridiculous. And so the question is, how can we regular people take action to push big insurance companies to stop insuring and investing in fossil fuels? And probably all of us could take a swing at that. So I'll just open it up. If anybody wants to start off, go ahead.
Well, Amy, you kind of started us off with a little bit of a hint there. As we all know, we're not going to end the pollution of plastics by recycling our plastic bottles. There's a systemic problem that requires a systemic solution. And we're not going to stop the money pipeline to fossil fuel and climate destruction by cutting up our credit cards. But we do need to start by living the change. It builds a movement. It changes the consciousness. So let's just say that we need to do what we're talking about here. Leave Travelers, leave Allstate, go find yourself a regional company that's putting your premiums back into the economy. But you need to be joining organizations like Insure Our Future, Green America, Green Faith, Third Act, stop the money pipeline, and we need to go after the big players.
Yeah, and I'll just add to what Michael said. I think there's a few things. I'll put a link here on the Insure Our Future website, and it's actually got a few things that people can do kind of based on whether like around kind of institutions. So if you are a business owner, your business will purchase insurance. You have some, power to flex there as a policyholder, just like you do as perhaps a homeowner or an auto owner. If you work for a city, or even if you don't, and you're just a resident of a city, cities and counties also purchase insurance, and they purchase a lot of insurance. And so they could also be kind of big, kind of power flexing customers in that way. And if we organize some of our cities to either adopt kind of procurement policies to basically favor insurance companies that have either lower exposure to fossil fuels or no exposure to fossil fuels, then that's another way to kind of exert some of that power. And there's been examples of that, and I'll show that in the link to the this link here, Get Involved. And then yeah, if there's any insurance professionals on this call, of course, that there's a lot of different ways that you could be raising this issue within your company and advocating for it. We've talked with a number of folks who are doing that right now. And then, yeah, there's just, I think, a number of different organizations as were named here who are getting involved in this issue. And so, definitely encourage folks to get involved that way.
Yeah, I always feel like any place there's a built-in community. That's why I love working with congregations. You already have a built-in group and a built-in community. Talk to that built-in group or that built-in community and figure out how you want to take action together. Sometimes it's hard to do these things when you're on your own, but if you can create a sense of synergy and energy within a group and hold each other accountable and support each other in the process, you can take the steps to whether it's move your money or change your insurance company or get your congregation to stop investing their endowment in something that has a lot of fossil fuels, to taking action in the streets. I mean, a lot of us are also involved in street action, and I know that isn't for everybody, but what it does do is it makes it public. And one of the things that I think happens a lot with money is it's a hush-hush conversation. People don't want to talk about it. People get nervous. I live in Charlotte, where we have a bank headquarters and it's a company town, and people get nervous when you start saying, we're going to go challenge Bank of America to stop doing this because, people work there. But we have to bring this to the public. We have to make this a public conversation, or we're not going to build the kind of awareness and pressure that we need to actually make the system move. There was one more question that came up that I wanted to ask really quickly. Is there any advice for HOA boards looking for new insurance? So here we've got a very practical question for a group, which is great. That's exactly the kind of thing we need to see people doing.
Well, Amy, interesting you bring up HOAs. Right now, we are collaborating with Third Act Florida. Again, I'm Third Act Upstate New York, in putting together a webinar for how homeowners associations, condos, might move their money. All that money that's sitting there in their bank deposits in reserves for the condominium association needs to move out of the Wall Street banks. So same thing. We need to be talking to the condominium associations about moving away from these national, international insurance companies. Shall I just repeat it? Eat local, shop local, bank local. Let's add insure local.
Yeah, I'm seeing, there's people are being talking about being nervous about switching their insurance company. I know we had some conversations about that regarding banks and our whether or not it would affect our credit and so on and so forth. And I want to be super sympathetic and empathetic with all the fears that people have about moving and changing things. But I also want to put it in perspective and say, if we don't do this, we're going to face a lot of terrible consequences in the not too distant future. And so I think whether we stay or whether we move, it's going to be nerve-wracking. And so I'm kind of on the, let's go ahead and move and see if we can avert some of the worst effects or the worst problems by hopefully getting insurance companies and banks to start moving in the right direction. But I do empathize with, the fear of not being able to be insured, or, not being able to get credit for the thing that you need to purchase. It's a hard situation. And I am looking to see if anyone else, oh yes, one more question came. We're at 8:02. Do we want to can we ask one more question before we leave? The last one is is there a divest movement to get states and cities to move their insurance?
Yeah, so I think I answered it a bit in the chat there, but if you go to if you go to the link I shared about get involved, and you go to cities and counties, you'll see a bit more information there. There's not like a broad kind of national movement right now of folks who are doing this, but there have been some local efforts. I've been working with some of those folks myself in a few places. Some of them have been successful. So for example, Boulder County a few years ago adopted a screen for the insurance that they purchase. And they basically look at all the insurance companies that they currently purchase from, and they go to work with their broker every year, the risk manager does, and says, hey, we would like to actually, we prefer ones that have lower exposure to fossil fuels. And they actually have switched a few of their insurance providers because of the new policy that they adopted. Some cities, it might take a resolution. Some of them, it might take a conversation with the risk manager. Some of them, it's a different process in different places. But if you go on that page, that's a kind of starting point for some resources. And I'm also happy to chat with folks about that.
All right. I think we're at time. Back over to you, Cathy.
Wonderful. Well, thank you all so much for being so engaged with this. Like we said, this is a new topic for Green America, for the climate finance movement as a whole. This is evolving, and I expect, the insurance campaign to pick up steam in, the months and years ahead. But if you'd like to learn more about these topics, we are going to follow up tonight's webinar with a recording, and the slides will be sent out to everyone who registered. You can also follow all of the groups that were present here in tonight's webinar. I'm going to put links in the chat for all 4 of our groups and encourage you to check out the websites, get on the email list. For Green America, you can sign up for our email at greenamerica.org. Sign up, all one word. And so that way you'll get news and information from Green America and notices of future webinars like this one. You can follow Green America on social media. We're on Facebook, Twitter, LinkedIn, Instagram, and newly on TikTok. So there's all the links for our social media. And you can donate to Green America. Your support fuels the work that we do for a greener, fairer future. And so I will put up the link to donate here. If you do donate, I think it's $25 a year, you'll get our magazine and our publications such as Your Green Life and our our Guide to Socially Responsible Investing and Better Banking. So your actions matter. Together we can build a more sustainable and just world. Thank you for your commitment to creating positive change, and we look forward to seeing you at our future events. Thanks so much.
Bye, everyone. Take care.
Bye.